After another terrible, horrible, no good, very bad day, where sellers, of course, panicked in response to some tepid data. Yesterday was the ugly PMI. Today was the ADP subpar payroll report. And, of course, in just general overall gloom. How do you protect yourself? Now, I've been warning you to raise cash in anticipation of a pullback. So now that the market is being hammered, what should you be doing as it retreats? Here's an idea. When we started rolling over yesterday, what was the best performer in the market? Why, it was McCormick, the world's leading maker of spices and seasonings, with a stock that managed to rally more than $10 or 6.8%, even on a hideous day. Now, some of that's because the company reported an okay quarter and the stock had pulled back going into the report. But there's another component here that we need to talk about. McCormick didn't rally in spite of yesterday's sell-off. It rallied because of yesterday's sell-off. This is exactly the kind of name that money managers love to pile into when they're worried about an economic slowdown. In other words, McCormick may be the perfect stock for this moment. And thanks to today's market-wide meltdown, you can actually buy this thing a little bit lower than it was yesterday, $2 lower. So what exactly happened with the thing yesterday? And why do I think it may be time to big in the stock as it goes down? Okay, McCormick is an uber long-time Cramer favorite. You know that. They dominate the spice aisle at your local supermarket, and they've got a big food service business where they supply the same spices and seasonings to restaurants. Plus, in 2017, in a just moment of brilliance, they bought a bunch of condiment brands from Reckitt Benckiser, like French's Mustard, Frank's Red Hot, which is, by the way, beloved by millennials, who I understand seem to put it on a lot of different things. Hey, the president, I think, mentioned it earlier today in a tweet. Hey, even if it's bad out there, people have to eat, right? And take it from my days when I lived in my Fort Fairmont. One of the few ways to make the same cheap, awful food taste different is to add spice. Thanks in part to the mustard and hot sauce You know, I always used to buy, you know, you go buy the chicken livers, you know, like in the little thing. They're the cheapest thing in the supermarket. And you pour stuff in one and it tastes different every night. Thanks in part to that mustard and hot sauce transaction, McCormick's been a terrific long-term outperformer. Stock's up 144% over the past 5 years, roughly triple the gain in the S&P 500 of that same period. I've recommended it again and again and again as the ultimate play on the stay-at-home economy, and I love that Reckitt Benckiser deal, even though the analysts hated it. In fact, in last Friday's game plan, I told you to buy McCormick ahead of the quarter, which turned out to be a pretty prescient call.
Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.